Hey guys, welcome back. In today's video, we are talking about how the shorts are seeking help, Citadel's margin call, how shorts are covering swaps, and many more in this video. Firstly, we're taking a look at this. Hedge funds seek to ease short seller rule on public offerings, as we see a hedge fund trade group is asking the Securities and Exchange Commission to scale back short seller regulations. Now, recently, we've already seen how the SEC has changed certain rules, which once again favors the institutions. It favors the short sellers who are extremely over leveraged and have too much risk at exposure. But despite all of that, we are still constantly seeing how certain hedge funds, how these institutions are still in need of help. They still are trying to get the SEC to make ways for them so that they don't explode on their positions. And now this already tells us what is going on within the industry. This lets us know that it is without a doubt that there are so many short sellers and institutions out there that are extremely over leveraged. And so when we see them ask and beg for rule changes, it's showing how they're getting very close to the fact that their positions are going to get liquidated, they're going to get margin called. And so whilst we are possibly going to be seeing another rule change like the ones we've shown a few days ago, it is still showing that despite how many things they're doing, these short sellers are still in a bad position. You can take another look on why they want these rule changes, because firstly, when we take a look at what happened with AMC stock volume today, so this was for the Friday, was 383% higher than the average daily volume. Now, orders of 385,000 shares were being traded, as you guys can see in the level 2. And furthermore, this is naked short wash trading, because selling their shares from the USA company to a sister company offshore. This resets the clock on FTD to keep the stock off red show threshold securities list. Now, firstly, everyone should be familiar right now in terms of what we mean by institutions trying to push these shares offshore, because we've said any shares that are traded offshore does not have to be reported, and it's why we've known that the short data for AMC and GME are extremely skewed, because we've seen how they've used the European market, we've seen how they used Asia market, once again highlighting the recent South Korean incident in terms of how the South Korean market broker has said that they are forced liquidating GME shares, hence implying there's obviously things going on, especially when we know that they are very strong with their stance on attacking naked shorts, on forbidding any naked short selling to obviously happen within the market. Now, another thing is, of course, how they're trying to reset the clock on FTDs, and is why we've said they are trying to find new ways of resetting these positions. It's why they're asking the SEC to ease short seller rule, because they realize they can't keep doing this, because whilst they are trying to reset the clock on FTDs, it's still costing them money. So they obviously want different ways, and is why we are seeing them beg for things like this. And then another thing is taking a look at the XRT. So once again, you can see how they're using these funds, they're using these shares, they're using different methods to essentially prolong this whole thing. We can see the number one GME shorting mechanism, XRT, is completely tapped dry. We've talked about this. These institutions use funds where they can short it and then short AMC and GME. We've seen it plenty of times with different ETFs, different funds that are out there. XRT is, of course, one of them. And the very fact we've seen them use it to short AMC and GME in the past before, and the fact it's gone to zero, should show you just how much in need these short sellers are of AMC and GME shares. Now, once again, you pair that up with what we just talked about with XRT, what we talked about with the recent volume in AMC, and then you link it to what we started with in terms of how hedge funds are seeking to ease short seller rule. You start to see why everything is obviously linked together. But that's not the end of it. When we take a look at where Citadel is at, now bear in mind that this hedge fund here, we are obviously not talking about Citadel, we're talking about just certain hedge funds, we're talking about, at them as a whole. But this particular thing, Citadel are $944 billion over leverage on a Japanese yen carry trade. Why are persistent rule breakers allowed to risk at 15x leverage? Why did the 2008 financial crisis not set more proactive measures in place? So we know that firstly, the reason why we keep a close eye at the situations of Citadel is because they are obviously heavily involved with shorting AMC and GME. And so everyone should know that. That's why we focus on Citadel. Recently, we talked about the Japanese yen carry trade. We talked about it as a whole, not just its connection with Citadel, but talking about how we can easily see that having a massive impact on the market as of right now because of the current economy issues. And now, when you put all of that and you know and you realize that Citadel are over leveraged by $944 billion, you talk about why they are panicking, why we've said that this Japanese yen carry trade could easily be the trigger because these short sellers are heavily exposed. Now, we've gone more in depth in terms of what this 944 billion is in the past before, but what we have to realize that right now, and again, for the simplest term to understand, is that we are seeing how short sellers of AMC are heavily tied with other situations that they can't easily move their capital. But not only that, they are also exposed to the fact that they could easily see billions of their capital getting liquidated. And so we said, and you have to understand, when their collaterals and other positions are all getting evaporated, liquidated, and margin called, it's also going to affect how they are able to suppress AMC. Because if they don't have the money, they can't suppress AMC. If they can't suppress AMC, AMC will show real price discovery. And once AMC starts showing real price discovery, once AMC goes up into the hundreds of dollars where I truly believe it should belong there, it starts then liquidating these short sellers. And that's when we'll obviously see the squeeze. And so you can understand why we talked about the Japanese yen carry trade is obviously very important. Another short seller to talk about why they're being affected. And you can see why we're looking at a lot of short sellers right now. And you can see why I started this video off with how short sellers are seeking help. Now, UBS. So UBS, for those of you familiar, they are not exactly a short seller of AMC. But what do I mean by that is that they haven't directly took short positions at AMC. However, what they have done is inherit short positions of AMC and GME. Firstly, kohrs. We've seen them obviously short GME. The GME swaps is what ultimately led to their demise. Then Credit Suisse, who inherited the kohrs swaps, but not only that, created AMC swaps, created the dark pools for AMC, created short positions on AMC, gave AMC extremely bad price targets, once again, were then affected by those positions, and then they went bankrupt. And ultimately, all of those things that we talked about with kohrs and Credit Suisse was inherited by UBS. So as what we've said, UBS haven't directly been shorting AMC, but they obviously hold on to these AMC and GME swaps that are extremely toxic, and we focus on that because it lets us understand the position of where short sellers are at, how big the position is, and how much money they're losing. Now in this case, we can see UBS just got told to swallow a 3 billion capital hit now, not later when it's convenient. Swiss lawmakers basically yell no can kicking and slam the door. Why apes care? UBS sits right on the same prime broker plumbing that's been recycling synthetic shorts since the Credit Suisse rescue. Less wiggle room equals less room to hide swaps. So ultimately, what we've been looking at is how these particular swaps that have bankrupted kohrs, that have bankrupted Credit Suisse, are now eating into UBS. And this is something we've been looking at for a very while now. And we've also seen how UBS have been told to obviously increase their margin. They've dumped billions of dollars into this already. It's eating into billions of dollars. And these billions of dollars, remember, they're not just gone. It's a zero-sum game. However much they've sunk into these AMC and GME swaps will ultimately be rewarded to the apes, the retail. And so this is why we obviously focus on this. And so right now we're seeing them running out of even more money. We are going to be looking at them potentially covering the swaps. And so you can ultimately understand why they are worried about everything that's going on. And then on top of this, we are looking at everything as a whole. US margin debt is skyrocketing. So we're now seeing how the US margin debt jumped another 40 billion in August. We're looking at it to be at 1.06 trillion. So this isn't even just focused on individual companies, but this is talking about institutions as a whole. We've seen how institutions have been borrowing more money. A lot of the margins being used are actually towards short positions, and we've seen it. And now as we're seeing it spike, as we're seeing margin depth spike, we're seeing the reverse repo go down. And realistically, you're looking at it the other way around, and you can understand why. As we're seeing the reverse repo go to zero, something we've been taking a close look on, we're seeing the margin to go up. So this shows just how easy money the reverse repo was and how heavily the shorts depended on it. And now as we're seeing that money to be going and going away, we're seeing why the margin depth is going up. So you can understand how the shorts are trying to borrow more money to short AMC, to short GME, but they can't keep this up forever. Now, as always, this is financial advice, so do take our particular result. Make sure to do your own due diligence and research, and I'll catch you guys next time.